Did you know that you could deduct the commission that you paid your realtor when you moved on your income tax return? Hi, my name is Amanda from CloudTax to help you maximize the deductions from your moving expenses with the Canada Revenue Agency. In order to qualify, the CRA requires your new place of the dwelling to be at least 40 kilometers closer to your new educational institution or place of employment. If you moved to take courses as a student in full-time attendance enrolled in a post-secondary program at a university, college, or other educational institution, you may qualify to deduct eligible moving expenses from the part of your scholarships, fellowships, bursaries, certain prizes, and research grants that is required to be included in your income. If you have moved and established a new home to be employed or run a business at a new location, you can deduct eligible moving expenses from the employment or self-employment income you earned at your new location. If you fall perfectly into either of these categories, you can easily claim your deductions on your tax return. Here are some eligible moving expenses that you might be able to claim towards the income that you earned in new employment, self-employment, or scholarship and grants income. If you haven't earned enough income, don't worry, you can still carry forward the expense for future years. Travel expenses include vehicle expenses, meals, and accommodation to move you and your household members to your new home. Temporary living expenses for up to a maximum of 15 days for meals and temporary lodging near the old and the new home for you and your household members can be claimed. Costs of canceling the lease for your old home, except any rental payment for the period during which you occupied the residence, are eligible moving expense. However, you cannot claim rental payments for any period before the cancellation of your lease, whether or not you occupied the home during this period. Incidental costs related to your move, which include the following: changing your address on legal documents, replacing driving licenses and non-commercial vehicle permits, and utility hookups and disconnections. Costs to maintain your old home when vacant, maximum of $5,000 after you moved, and during a period where reasonable efforts were made to sell the home, which includes interest, property taxes, insurance premiums, and cost of heating and utilities expenses. When you are filing your return, you need to remember that these costs must have been incurred when your old home was not ordinarily occupied by you or any other person who ordinarily resided with you at the old home just before the move. You cannot deduct these costs during a period when the old home was rented. You also may be able to deduct the costs of selling your old home, including advertising, notary or legal fees, real estate commission, and mortgage penalty when the mortgage is paid off before maturity. In addition to the cost of buying your new home if you or your spouse or common law partner sold your old home because of your move. However, you cannot deduct expenses for which you were reimbursed by your employer and that are not included in your income, and expenses for which you do not have the required supporting documentation. For more information about this and other tax topics, please visit cloudtax.ca.